Completely agree. It's a good time for advisors to show their knowledge in the market and really act on complex deals and also just on asset types which may not do as well as they have done in the past. Jonathan, how can advisors, accountants also help self-employed borrowers, whether it's for a buy-to-let, a commercial loan, or a mortgage?
Well, I think, again, it starts with the communication. So a lot of the time, the accountant will be contacted either by the broker or the client. I need a reference. I need it today. If I don't get it today, I can't get a mortgage, and you've ruined my whole life. So this really, starts with the communication with the client. Clients need to be talking to the accountant about what they're thinking. I want to move home. I want to buy a buy-to-let, and we can then start to talk about the information that we will need to generate with them for the lender. And so there's a responsibility from the client to be talking to the accountant at a very early stage. And then with that, we have to bridge the gap as well, where we're talking to the lenders and we understand the type of package that they are looking to receive. So it's no longer the last 2 or 3 years tax returns, last 2 or 3 years accounts. That's a given. That could be turned around quickly. But what can we do to help support the application? So a lot of owner-managed businesses, self-employed people, will not be working with technology in terms of the likes of Sage, Xero, QuickBooks. But within that, if we could get people onto a technological platform, then we can help to project the future and what the next 12, 24 months looks like by using other integrated packages that work with the likes of Xero and QuickBooks and Sage to produce a forecast that has sensitivities in it as well. Because the key here is for us to make life easier for the underwriter so that the questions that come back are limited. And we can do that by bridging the gap, by speaking to the client saying, this is what you need to give us. This is the ammunition that we need. And then by speaking to the lender, we will understand how we can package this up to give them the best chance of success and also cut down the time and inefficiencies in the process.
Yeah, I think that's really important, because if we're going to be spending more time doing stuff, we want to make it as slick as possible. So we're concentrating on core activities that drive the application forward, and not simply admin for admin's sake. And previously we could have done that because there was a slack in the system because we weren't asked so many questions, whereas now it's not. And I think where the broker comes into this is providing excellent packaging. Is when the application is submitted, the lender gives you a list of things that they want to see to start with, making sure that everything is on that list, and we're not sending through an application with bank statements missing or no tax calculation or overview, because that in the end is not appropriate. And I think it's where brokers need to educate the client to say, well, look, I know you're desperate for it, I know you want to move forward as quickly as possible, and we need this offer out fast, but I need from you this long list of things. If I haven't got this, I'm not going to submit it, because it's just going to delay. Whereas if I know I submit, if we wait another week to get this final document and I submit it, I know I'm going to get a more positive and quick response from the underwriter, because they have everything in place and they can respond and then ask questions based on the documents you've got, as opposed to sending me another list back saying, well, you haven't got all this stuff. I mean, it antagonizes the client because you're going back and forth. It's kind of drip feeding back and forth. But it's just, it's discipline ultimately from a broker and from a client to do all of this. And it's not hard, because we had to do this after a recession as well, because suddenly lenders were much stricter when we had to do. We had to learn the new world, and we did. And no doubt we can do that again. But we just need to cut out those efficiencies to make it much easier for everyone to say yes, or as importantly, to say no quickly. The last thing you want is to drag it out and have a no after 3 weeks. We want to know immediately. And if we've got the documents in place, we can just say, look, this isn't for us, fine. As opposed to, leading everybody else on and then find that one key document we didn't have at the start actually negates the entire process.
But I think as well, though, Alistair, with that, it's the opportunity for the business person to actually look at their business very carefully. And this is what I'm finding with good clients that I'm speaking to on a regular basis. they've actually had the opportunity through the pandemic to actually pause and look at their business, look at the resourcing of it, look how the business works. So what is being asked of the borrower should actually be instilled through this process, should have been instilled anyway, but it should be further instilled through this process by actually having good working practice and understanding of the business. So again, I see this as a good thing because it gives the opportunity for someone to really, really understand their business and understand what it looks like going forwards. So it's not only a good thing for the lender, it's a good thing for them as well. And this is the strategy that people should be having in place. Forward-looking, understanding how they're resourced, understanding the contingencies and sensitivities that need to be put in place, and actually understanding what coverage they've got within the business, which will then full circle come back to, should I even be thinking about borrowing this money? Should I be buying this house? So it's good business practice that's going to be instilled here.
Does this prepare them further for, like you're saying, for future funding options if they wanted to grow their business and needed funding for that, or if they wanted a commercial loan, for example?
Yeah, I think so. A couple of things really. I know it's going to be more difficult to do that moving forward because clearly a lot of lenders and distributors will be looking at whether or not will be indirectly funding potentially an ailing business or to rescue a business. So it's one of the reasons why Aldermore, unfortunately, have pulled away from business purpose capital raising for that reason, that we want to be just clear at the moment on what we can and can't help with. But I think moving forwards though, there is an enormous proactivity on your own business, the self-employed would-be borrower, that actually this is a huge wake-up call for everybody, lenders, intermediaries, clients, that actually there's probably a couple of things that we may have not overlooked, but probably not taken too much detail into. One of the things very much is, well, how am I looking to invest over the next few years in the business, and how am I going to do that? Is it via profit? Is it via extra lending? Taking into account as well moving forward the buy-to-let landlords that are self-employed in the industry now. Am I exposed to people that are actually, renting from me that are in really high-risk areas, your hospitality, your flight and travel, things like that. So it will change people's mentalities. But in terms of borrowing, I think that coming out of this proactively, I think it will go back to the normal of allowing people to raise money from whatever service they need to fund their business, but it will be in a more detailed and structured way, and people will need to, like Jonathan quite rightfully said, proactively look forward. And I think it's a positive message, really. Try and have that forward hat on to mitigate any risk in the future rather than trying to cover what would be now and what's happened before.
Yeah, and you look at how robust the industry is now compared to after the recession. How lenders have so much more capital, how liquidity is not a problem at all, how people are dealing with the experience of that, dealing with crisis management. You see how strong as an industry, as a sector, we are now. It's put us in good stead. And if this allows us to grow stronger as a sector and other sectors too, ultimately, you're right, we'll end up with leaner, better businesses, especially ones that are able to adapt and take advantage of these massive changes.
Obviously, SMEs make up the majority of the UK's economy, so a lot of people are in the same boat, especially when it comes to self-employed. What advice would you all give to self-employed people during this time who may be struggling and are looking for finance?
So from my point of view, it's always about proactively using, and it depends on what the situation is. If you're currently looking for finance in an immediate format, then it's about plugging the gap, okay? And I'm going to give you an example now of how Aldermore are proactively using, that mentality today in the world that's, really been hit hard by the pandemic, where we're seeing borrowers who have actually just had to stop trading, but they've still been able to obtain finance. And I'll tell you why. So most of the applications that we will see for self-employed in the current climate do have an element of stability. So the examples that we're seeing are, married couples, family home. One half of the mortgage applicant, i.e. wife or husband, doesn't really matter, are in a stable line of work, who haven't been affected and, can continue to work remotely, or whether it's in office-based or not. But we have a self-employed borrower on there who has been, harshly affected. Let's take a tradesperson who has been literally stopped from trading immediately. Okay. Now, that's a major concern for a lender. We're going to give someone money that has no way of paying it back currently. However, with the process that we're putting in place, what we're looking to get closer to is, well, what's the contingency? And actually, we can get a mindset of, well, what does the future look like? And here's an example that we're seeing. We're seeing a lot of would-be borrowers who are infected and had to plug the gap, and they've gone out and invested themselves in that spare time into different lines of work. So, delivery drivers, the demand for that at the minute is through the roof. And we're seeing a lot of people that have had to stop trading going to become delivery drivers for your household supermarkets. Whilst that doesn't provide the level of income to cover what they've just lost, it does plug the gap. And proactively, we're looking at that and thinking, okay, well, moving forward, we will speak to the accountant and we will ask what the forecasted projections will be in the future. I know we can't have crystal balls, but if we go back to a world where we're allowed to go starting trades, people fitting windows, changing boilers, things like that, that the income will be sustainable to the same levels before. So actually, that's the type of case that we're looking to consider every time, because we know that people are doing their best to plug the gap, to cover the issues they may have currently with income, but there's still enough room for it with the solid second applicant. That's got to be clear. There's still enough room and it's still a feasible deal. But even if one person's at risk in a self-employed area, we're using their business mentality to get them to the offer.
But I think added with that, and I think there's some really sort of great points made there. I think added with that, the situation is that in an owner-managed business environment and a self-employed environment, it's very lonely. So you a lot of the time feel that you're in this by yourself. And the pandemic has, from what I have seen, has created two types of people. The person that is catastrophizing and is anxious and very worried, which is then stifling them to get back to a normality. And then there's the second type of person who is finding ways through this. So the person who was a tradesman, who's a delivery driver, really digging deep to find their ways through this, and also looking at a business in a different way than they've ever looked at it before. And there's a whole pool of resources out there to share the anxiety that people are facing. But we're also going to get through this. We're going to come out the other side. And people need to be confident that things, whatever the new normal looks like, the world will have to keep on spinning and turning. And with that will come opportunities. And with that, people need to be then focused on what their business is, where the opportunities lie, and communicate those and look forwards.
Yeah, I'd agree with all that. It's the people who are innovative, who are taking this as an opportunity, the ones that you want to lend to, as Matt said, and it will come right again. We may not we'll have a different normal, and it will come good again. It's just a question of when. But those people who are spending the time to do the right things, to think it through, to find new employment types or whatever, those are the people that clearly you're going to feel more comfortable in supporting when they've got needs.
What positives have come out of this in terms of product innovation and creation?
I think being forced to, from the lender's point of view, being forced to work off site has accelerated plans to be able to go more digital, to be able to work remotely. And we personally have found it not as difficult as maybe we'd anticipated. So we'll continue pushing that going forward, because there's lots of advantages of not being in the office and being able to communicate differently. That's a plus that's come out of this, trying to find a positive out of all this.
I'd echo that as well, but on behalf of the self-employed borrowers. So a lot of the things that we're seeing now are self-employed business owners, sending staff to work at home. And actually, this is a big wake-up call to think, isn't this now the way we work? So they may well cut back on them huge overheads, which is an office building, running costs, facilities. And that's a plus for the self-employed market itself, let alone just the positives we've seen here out of this.
The only thing that I would say with that, and I'm very much pro the working from home, and even my own mentality as running my own accountancy firm has shifted. I still feel that I hope we don't go too far with this, because human interaction and communication is very, very important. training people up, learning from your peers, gaining experience and having conversations is critical to businesses and is also healthy. Being locked up at home, working to your own end, I think has a place, but I hope we don't put the shift too far. That's my personal perspective on this. I think there's a balance to be struck here.
Yeah, I agree with that. My life is 4 days on the road with my team and meeting intermediaries and hosting events and so on, and 1 day at home. Can't catch up on all the stuff I'm not done. But yeah, the 5 days at home is a bit tough at the minute. Well, 7 days really, but yeah, it's tough. And it is something that people have had to adapt to. But it's got its pros and cons, sure.
Funny enough, I think it's tougher for my family than it was for me. I think they've sent me back to the office.
I agree with that. Yeah.
I think that there's always opportunity in crisis, and I think that it accelerates innovation because you're in a situation which you didn't expect to be. So stuff that would have taken years to come to market and fruition suddenly is happening within weeks and months, and I think a lot of those things will probably stay in place after this. I think that's very useful. I think in terms of the discussion we were having before about the way self-employed mortgages would be underwritten, instead of using historic data, it's using more up-to-date data. I think that will probably stay in as well. And as John said previously, I think that's a really good thing, because you are using historic data, which could be a year old. I mean, a year is a long time. A lot of things could have happened in that point. And if a lender doesn't ask for an accountant's reference, and they may not do because they've got the data, no one's going to know. No one's going to know. Whereas if we're now looking at a far more current and future situation as well as just the past situation, lenders end up with a far better lending book, and hopefully that means that we can keep prices low because risk is exceptionally low, and it's rewarding clients who are doing the right thing. It's rewarding clients who are good at communicating with their accountants and their solicitors and their brokers and our professional advisors. It's rewarding clients who are close to their business. No one likes dealing with a client who you ask a question about a business and they just sort of go, I have no idea. I have no idea about this. It's like, well, it's not, okay, I appreciate you may not know the minutiae of your accounts. I understand that, but you should at least have an idea about your turnover and your net profit, at least within like a certain figure. I think clients who don't have that control and that insight into their business, they're going to really struggle. Whereas ones who do have a handle on it and do understand their business model, understand the strengths and weaknesses, especially the weaknesses, they're the ones that are going to succeed and ultimately be rewarded by lenders for making their life much easier to grant a mortgage. Whereas ones where we're having to do a lot more work because they just don't understand it, or we're given data which is incorrect, and the back and forth. They're going to learn quite quickly that you can't run your business like that to survive or to borrow. And hopefully it streamlines everybody, weeds out those who maybe are not suitable for this new world. The ones that are going to absolutely succeed.
Just following from that, do you think that it has upskilled all parties within a specialist mortgage transaction for self-employed?
Yeah, definitely. It's the amount of things you have to go through now is growth from before. You're learning stuff all the time, and I think as a broker that's brilliant, because you're learning more things about individual sectors, and I think that's really good, because when you're talking to other clients in that same sector, saying, well, I'm speaking to this other chap and I understand that you're doing this and doing that, are you doing this, these are issues in your sector, and suddenly from the client's point of view, it's like, oh, this person's dealt with someone like me before. And it makes it much easier to transact with that client. That client feels much more confident. And I feel confident because I'm asking questions that I know I've been asked by an underwriter previously. And I know if the answer to that question is negative, well, I can't take this forward. I'm not going to waste anyone's time to do this. Clients will come up like 6 months later with something different. But at least then we're weeding people out, who are not going to be acceptable to ones that are. And I think that upskilling is really important. And as Jonathan said, being together to have those conversations, to have training, to have discussions, that's so important, because you learn all the time from each other, and things like Zoom calls are, it's good and useful. You get to see people's faces, etc. But you're not in the same office. You're not listening to people's phone calls about, you're picking up techniques how to talk to different people, different sectors, because you're not around. And we need to get back to that situation where we can listen to each other and learn from each other and move things forward, especially at a time when learning is absolutely key.
Matt and Stephen, would you agree that it's potentially upskilled the people within your teams as well?
It's definitely upskilled people in my team who are facing into the intermediaries every day that are trying to understand more around, like Alistair said, the affected industries and what's our take on them. Definitely the underwriting teams have had to get a lot closer to what they look and how they take a case on. But I think the big learn for us all is the one that's going on as we speak, which is people are now having to forward think, what do we do next year for the next financial year? Because we've already alluded to the fact there's a lot of people in crisis at the moment. There's a lot of bounce back loans being given out. There's a lot of grants being given out. But actually, next year, the fact remains that SA 302s and tax year reviews will show a loss of income for many people. The winner in that and the real positive parts are the lenders that step forward and start to learn from this and take a proactive approach on forward thinking about income rather than historic, because there is going to be gaps, financial gaps that there's going to be mitigants for, your CBILS, your grants, your different lines of employed work they've taken in the meantime to plug them gaps. But forward-looking projection lending is probably going to be the future out of this. And the lenders that crack that are the ones that are going to be the real big asset to the self-employed borrowers and also the intermediaries.
Yeah, I'd agree with that. It's about learning as we go along. We mostly deal with complicated circumstances anyhow. So this is just another factor, the uncertainty of the future, and we're trying to share amongst the underwriters their experience of cases so we can all learn from things that have come in front of us to help us be more consistent and hopefully helpful to future clients. But you're quite right. How do you deal with those poor separate accounts going forward? I think it's just an extension of trying to predict the future, isn't it, sensibly from what you know. And we're going to learn an awful lot about the future in the next 6 months.